Hello guys, fairbinaryoptions.com here, and we are looking at the US dollar Canadian dollar with some bullish eyes heading into next week. Well, first of all, I would like to start with the fundamentals, and the fundamentals here are saying that the US dollar Canadian dollar is going to move based on the Bank of Canada this Wednesday. And Bank of Canada this Wednesday, Bank of Canada lately has been quite bearish on the Canadian dollar, like actually any central bank that established a monetary policy lately. So what I would like to see here, or what I would like to do here on the US dollar Canadian dollar, is to buy some call options by the time the markets are going to open on Monday, and that is on the technical on the fundamental side. On the technical side, I would like to point out a couple of patterns here on the 4-hour chart. As you can see, first of all, here this is a nice contracting triangle. See, the beauty of this contracting triangle comes from the fact that market is building pressure to the downside here. So rejected, and then it tries to break, fails, but fails to make a new high, tries again, fails, so not breaking the previous high, tries again, fails, but not breaking the previous high, triangle broken, retested, and then the move to the downside. Well, I don't know how you call this one, but I call this one a classical contracting triangle. It is being a horizontal contracting triangle. All the rules are actually respected here. Funny enough is that price comes from the upside after breaking another contracting triangle, but this time this one acted as a reversal pattern, in the sense that the previous move to the upside has been bullish or rising, forms a contracting triangle here, and then breaks lower. It means that the leg to the downside starts actually from this moment of time, and this should be A, B, C, D, E, and then price break lower. So if you are trying to put a labeling for the move that starts from here to here, I would say that this is a classical zigzag. Now, like this, from here to there, zigzag. Now if you take a, let's try to measure this zigzag. If you take a line and we measure it from here to here like this, let's make it of a different color, and then you take this one from here to here and you project it here like this, you are seeing that this would be the ideal 100% correlation between the two zigzags. But in this scenario, it is not the case. Probably it is something like 161.8 as it is here, but what we want to know is to classify this zigzag to see what kind of a zigzag it is. This one comes only when we are relating the move with the Fibonacci retracement based on the previous zigzag. So I would say that this is, let's try to measure it, 61.8 is this one, and if you take 61.8 and put it by the moment the triangle breaks like this, this would be 61.8. That is minimum to go for the zigzag to be considered a normal zigzag or a truncated zigzag. Well, this one, the C wave, goes to the downside more than 61.8 when compared with the previous wave A, and therefore this is being called a normal zigzag, so a classical zigzag. Therefore it should be labeled A and the B and the C wave here to the downside. So A, B, C, and then price moving to the upside. What should be the strategy heading into next week, or what to do going into next week? Well, definitely this trend line here, if you are projecting it on the right side like this, this would be the first hurdle or the target that the price might have, first of all. Second of all, look at this area where price hesitated for so many times, and this area is being given by this, like this. See here, price, look at the price, or how price is acting here. This is support, then support is broken, and then again it is becoming support, and support is broken and becomes resistance, 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 resistance. So I would say that it is mandatory for price to go 110.50 area, 110.55, so almost 100 pips from this level, and I will book all the profits here if I would trade the regular spot market. But if you are trading binary options like we are trading here, I would go with call options, and I would choose the expiration date as being end of week expiration date next week. So let's write here that I would like to buy, or we are looking to buy, call options with end of week expiration date by the time markets are opening on Monday. Again, the reason for it is both technical and fundamental. On the technical side, we have a corrective wave that just breaks to the upside. On the fundamental side, we have Bank of Canada, which should be as bearish as it can be. Thank you very much for being here. This is fairbinaryoptions.com, and what you're looking at here is US dollar, Canadian dollar with a bit of a bullish scenario for next week, and therefore just bought call options, or we're looking to buy call options on Monday, end of week expiration day. Thank you very much for being here again. All these analyses and recommendations are possible due to our official sponsor Lionheart, and I invite you to go on fairbinaryoptions.com website, and under the Binary Options Academy you have all these educational materials about how to treat a triangle, how to treat a wedge, or how to trade binary options using divergences, and so on and so on. Make sure you check it, as it is highly educational. Have a great day, have a great Sunday, and let's prepare for trading next week. Bye bye.